Big Bear AI is one of the most popular AI stocks in the market right now. Of course, contributing to the popularity is the relatively low share price. It's trading at less than $10 per share. And if you notice, the stocks that tend to get popular with retail investors are the ones that trade at relatively inexpensive prices. So, in its latest quarterly meeting with Wall Street analysts, Big Bear's management team highlighted some of the difficulties they're having in the business. Like all federal contractors, they are navigating the government shutdown, which has recently ended, thankfully. Importantly, over 80% of their government contract work has been deemed accepted and mission essential, including their work for the Department of War and Department of Homeland Security. So, the other side of that, of course, is that 20% has not been deemed essential, and that part of the business is uh, under threat to be canceled or just paused. And of course, earlier in the year, Big Bear AI also lost some contracts because of the cost cutting. Remember when President Donald Trump and Elon Musk were best friends and they were going around cutting government spending? One of the areas they cut government spending on was in government contracts with institutions and private companies like Big Bear AI that contract with the federal government for consulting and other services. So they've already lost some government business, and now during the shutdown, more of their business was disrupted because of those. So that said, parts of contracts, mostly for the intelligence community, have been temporarily paused and have resulted in some revenue and personnel disruption. And of course, this is a bigger deal for a company like Big Bear AI, which is losing a lot of money on the bottom line already, even with the government contracts going as expected. They're still losing money on the bottom line. And so that is even worsened when these deals are paused. So at the end of the third quarter, they have total cash and investments of 715 million, which includes 457 million of cash and 258 million of held maturity securities. So these are cash and short-term investments that the company, if it's not in cash, they can quickly turn it into cash. So overall, they've got about 715 million of cash. And that's important because, like I mentioned earlier, they're losing money on the bottom line. Click the link below to watch the full video.